We're joined now by the ABC's business editor, Peter Ryan. Peter, good morning. Now, the RBA board, as we all know, is completely independent. It'll do what it wants to do when it meets today, but you'd have to say, looking at some of the most recent numbers, they are pointing to potentially a bigger than expected rate cut.
Well, if you look at what economists are saying, Michael, just looking at the most recent poll from the Reuters Wire agency, 21 of 22 economists are tipping 25 basis points. It's pretty much Citigroup, which is going for 50 basis points, but also, of course, other business lobby groups believe and have been putting the case that 50 basis points now at 2:30 Eastern this afternoon is required to really kickstart the economy, and also to ensure that the commercial banks do indeed pass on a decent slice to homeowners or people running businesses. But it does appear it is going to be 25 basis points, but most likely with a follow-up in June. So it's a bit of a difference as to whether or not it's going to be 50 today or 25 today or 25 spread over the next couple of months, perhaps with another follow-up during the year.
Now, the argument behind a bigger than expected rate cut is that it's the only way to really affect a reasonable rate cut by the major banks, even if it was 25 basis points spread over a couple of meetings.
Yes, well, we don't know what the commercial banks will do, but of course they do have form, in particular, of gradually making out-of-cycle rate increases. And of course the ANZ Bank has separated itself from the Reserve Bank's decisions by making a decision on the second Friday of every month. It will be interesting this week because tomorrow, for example, the ANZ will be rolling out its half-year profits, and that will be an opportunity to grill the ANZ CEO, Mike Smith, about what he thinks about higher funding costs and what should be passed on to borrowers. We'll also be hearing from Westpac on Wednesday. But just to provide a little bit of context about where we are in the economy, if we're not talking about an economy that is nationally in recession, although some states, the non-mining states, are doing it very tough. But if you look at when there have been hefty rate cuts, you could go back to 2008. After the collapse of Lehman Brothers, a full 1 percentage point cut in October 2008, followed up by 75 basis points in November 2008, another 1% cut in December 2008, and another 1% cut in February 2009. And of course, they were in crisis situations, a crisis scenario when the world didn't know what was happening with the global economy. We're not quite in that scenario at the moment.